Okay, so let's just dive right in. It is what, February 2026.
Right.
And I think if you've been looking at your portfolio or really just scrolling through the financial news lately,
Oh, yeah.
you'd be forgiven for thinking the whole EV party is, well, officially over. Sales growth has slowed down. Charging is still a mess.
It definitely feels like an EV winter compared to, the hype from a few years ago.
Mm.
The easy money is gone.
Exactly. And that's actually why I wanted to do this deep dive today. Because while all the headlines are focused on the giants, on Tesla and BYD,
And their price wars?
and their brutal price wars, yeah, the smart money, or at least what these reports we've been reading suggest, is looking somewhere else, at the edges.
It's a pretty contradictory strategy on the surface.
It really is, right?
Hmm.
We're looking at two companies to play this next phase. One is, well, it's a high-wire science experiment that's been burning cash for a decade.
And the other?
The other is basically a luxury fashion house that just happens to make cars. We are talking about QuantumScape and
Okay.
Ferrari.
Talk about a study in extremes. I mean, that is the barbell strategy in a nutshell. High risk, high reward tech on one end.
And an unshakable, iconic brand on the other.
It might just be the most durable brand in history.
So that's the mission for today. To figure out why on earth these two make sense together. Why pair a pre-revenue battery lab with, the guys who make the Enzo.
And why now? Why are analysts flagging these in early 2026?
Exactly.
I think it comes down to looking past the actual car. You have to decide, do you want to bet on the components, the thing that makes all the cars go? Or do you bet on the brand, the badge that makes people stop and stare?
I love that framing. So let's start with the components. Let's talk about QuantumScape, ticker QS.
The perennial next big thing.
I was just looking this morning. It's trading around, what, $7.78?
Yeah, up that.
Market cap is $4.7 billion, and it's down like 12% recently. So if you just glance at the stock chart,
You'd think they were in trouble.
you would. But the research we've seen suggests they've actually just turned a major corner. They're calling this a classic pick and shovel play.
Right, the old gold rush analogy. Don't bet on which miner finds gold. Bet on the guy selling the shovels to all of them.
So it doesn't matter if Ford or VW wins the sales war.
Exactly.
Yeah.
If they want to compete in the long run, they all need better batteries. And that's the shovel QuantumScape is selling.
Okay, but we've been hearing about better batteries for years now. It feels like every 6 months there's some new million-mile battery press release. What makes QuantumScape's tech really different?
It is genuinely distinct. So the batteries in your phone, in current EVs, are lithium-ion with a liquid electrolyte. They work, but they have real limits. They can catch fire, they're heavy,
They have a ceiling.
they have a ceiling.
Yeah.
QuantumScape is all in on solid-state batteries.
The holy grail.
It really is. And to get specific, they're working on something called anode-free lithium metal.
Okay, anode-free. Break that down for us. Why does that matter?
Well, think about a normal battery. A huge chunk of it, the anode, is basically just inactive scaffolding. It's dead weight that holds the lithium.
Right, just structure.
Just structure.
Yeah.
By going anode-free and using a sliver of pure lithium metal, you get rid of all that dead weight. You can cram way more energy into a much smaller, lighter space.
So lighter cars, much longer range.
That's the idea. We're talking 4 key things. Way faster charging, maybe 0 to 80% in 15 minutes.
Wow.
Huge range increases, lower costs down the line, and they're much, much safer. No flammable liquid to burn.
That sounds, well, perfect. So if it's so perfect, why isn't it in every car right now? What's been the holdup?
Manufacturing. It's one thing to
Oh.
build a perfect little battery in a lab with a team of PhDs.
Sure.
It's a completely different nightmare to make millions of them flawlessly every single second. And the bottleneck has always been their ceramic separator.
And this is that super thin sheet that keeps the positive and negative sides from touching, right?
Correct. It's their secret sauce. But making that ceramic film used to be painfully slow.
Which brings us to Cobra. I saw this in the report, and I have to say, it sounds like a G.I. Joe villain.
It does sound dramatic, doesn't it? But it's fitting because it basically kills the bottleneck. Their old process was called Raptor.
Also a cool name.
Also cool but slow. With Raptor, they were heat treating these ceramic sheets one by one. Imagine baking cookies, but you have to put each one in the oven by itself.
You'd never scale that. You couldn't supply an entire industry that way.
Never. That heating step was the choke point. Cobra changes the game. It allows for continuous processing. The key stat here is that it speeds up that specific step by roughly 25 times.
25x, that's not a small improvement, that's a leap.
It's a paradigm shift. It means a smaller factory footprint, less energy use, and it's what finally allows them to talk about gigawatt-hour scale production.
So Cobra is the conveyor belt for your cookie oven.
That's a perfect way to picture it. And that conveyor belt is finally moving fast enough to supply a major automaker.
Okay, so the tech is real, the manufacturing process seems to be solved, in theory. But let's play devil's advocate. The stock is under $8. What's the risk? This sounds like a slam dunk, but the market clearly doesn't think so yet.
The risk is all execution and time. They're shipping samples to customers like Volkswagen now, but full commercialization. That's still a huge mountain to climb.
And the competition isn't just sitting around waiting.
Not at all. You have giants like CATL in China pouring billions into their own tech. And investors have been burned by battery startups before. It's a capital-intensive graveyard.
So the analysis is clear.
High risk, high reward. You're betting their ceramic separator is the one. If it is, this is a 10 or 20x stock. If they stumble in scaling Cobra,
It could go to zero.
it could. This is for the part of your portfolio that can handle some serious volatility.
Got it. QuantumScape is the lottery ticket, but one based on some very real science.
Okay, let's pivot to the other side of that barbell. The hidden EV giant.
I have to admit, when I saw Ferrari in an EV deep dive, I kind of laughed. My mental image of a Ferrari is a screaming V12. It's noise.
It's gasoline.
It's gasoline. But the reality of their business has been shifting right under our noses.
Very quietly, yes.
This report says 43% of their shipments in the third quarter were hybrids. That number just floored me. Nearly half of all new Ferraris are electrified.
It's a huge number. And it's not because their customers suddenly care about polar bears. It's because Ferrari used electrification to make the cars better. The electric motors fill in the torque gaps from the turbo engines. It's a performance enhancer.
So they've already trained their super exclusive customer base to accept batteries.
They've normalized it, which sets the stage for the really big news. They are unveiling their first full electric vehicle later this year.
A Ferrari with no engine.
Just electrons.
That feels like a massive gamble. But before we get into that, let's talk about the business itself, because Ferrari doesn't operate like any other car company.
Not even close. Look at Ford or GM. They are fighting for every penny of margin. Ferrari is the complete opposite.
The gross margin number in this report is 58.25%. That's just obscene. That's a software company margin, not a car company.
It is. And the secret sauce isn't just the sticker price of the car. It's what they call the personalization program.
This is where you pick the color of the stitching on the seats.
Oh, it's so much more than that. It's the $30,000 historic paint colors, the carbon fiber, everything. The average buyer adds tens, sometimes hundreds of thousands of dollars in options.
And the margin on those options has to be almost pure profit.
Practically. It costs them basically the same to paint a car red or a special vintage blue. But the customer pays a massive premium for that exclusivity. That's their moat. They don't sell transportation. They sell membership to a club.
So when you hear about inflation or rising lithium costs...
Ferrari just raises the price. And they always build one less car than the market demands so the customers pay it. They have pricing power that Tesla can only dream of.
Which explains the stock price. It's around $390, a $70 billion market cap. It's not cheap.
It's not. But the analysis points out that if you look at its historical price-to-earnings ratio, it's actually trading at a bit of a discount right now.
A rare discount, I think they called it.
Exactly. The market is a little nervous about this full EV transition, about the, soul of the car. But if you believe they can execute, and that 43% hybrid number says they can, this is a chance to buy a luxury monopoly on sale.
Let's talk about that risk, though, the soul. Because you mentioned it, and it's the elephant in the room. Ferrari sells emotion, and a huge part of that emotion is the sound, the roar. If you take the engine out, aren't you just selling a really, really fast appliance?
That is the multi-billion-dollar question, isn't it? Can you sell a silent Ferrari?
I mean, a Tesla Plaid is unbelievably fast, but nobody looks at a Tesla and feels that same, that same lust.
Right. Ferrari has to prove that the Ferrari-ness of their cars isn't just the cylinders. It's the handling, the design, the steering feel, the history, the exclusivity.
Have we heard anything about what they're doing for the sound? Are they just going to pump in fake engine noises?
The rumors are they're developing sound signatures, amplifying the natural whine of the electric motors and the sound of the wind to create something totally unique. It won't sound like a V12, but it won't be silent either.
It's a fascinating pivot. You're betting the brand itself is stronger than the engine that defined it for 70 years.
And that's the stability play. You're betting on what is arguably the best management team in the auto business to navigate the hardest transition in their entire history.
Okay, so let's bring this all together for everyone listening. We have the barbell.
The barbell.
On one side, you've got QuantumScape, the bet on pure potential.
The bet that the whole industry needs a better battery and that the Cobra process is the key. It's volatile, it's a bit scary, but the upside is just immense.
And on the other side, Ferrari, the bet on flawless execution and brand.
The bet that luxury is recession-proof and that the prancing horse badge matters more than what's under the hood. It's the sleep well at night stock.
It's so interesting. They're both tackling the exact same problem, the future of the car, but from completely opposite ends of the universe. One is solving physics.
And the other is solving psychology.
That's a perfect way to put it. QuantumScape is battling chemistry. Ferrari is battling brand heritage.
So if you had to pick one, gun to your head, next 5 years.
Oh, man. That's tough.
I know. That's why I asked you.
I think if I'm looking for aggressive growth, it has to be QuantumScape. The battery market is just going to be trillions of dollars. But if I want to protect wealth, it's Ferrari, no question.
Yeah, I'm with you. For the kind of well-informed listener we have, you probably want a bit of both, but maybe weighted more toward the quality and stability of Ferrari.
Agreed. Don't bet the farm on the science experiment, but maybe buy enough that you'll be really happy if they do, in fact, invent the Holy Grail.
Precisely.
Okay, before we wrap, I want to leave you with one final thought. We've talked a lot about numbers, right? 58% margins, 25x speed-ups. But there's a cultural shift here that these two stocks perfectly represent.
Go on.
For 100 years, the coolest piece of technology you could own was a machine that contained thousands of tiny, controlled explosions every minute.
The internal combustion engine.
Right. It was loud, it was visceral, it was hot. And now we're moving to an era of solid-state ceramics and silent torque. The very definition of power is changing.
That's a great point. And the provocative thought I'd add to that is, if Ferrari, the absolute guardian of that explosion era, successfully goes electric, does that mean the engine as a cultural icon is officially dead?
Is the V12 about to become the new mechanical watch? Something beautiful and intricate that you appreciate, but it's not the technology that actually runs the world anymore?
I think that's exactly where it's headed. The Swiss watch didn't die when the Apple Watch came out. It just became even more of a luxury item. Maybe gas cars are the new Rolexes?
And electric cars are the new iPhone.
And QuantumScape wants to be the company making the battery for every single one of those iPhones.
There it is. That's the whole thesis right there.
There it is.
All right, a lot to think about. Whether you're into ceramic science or custom leather stitching, the EV market is clearly a lot more interesting than just buying Tesla.
Stay well informed, look for those pick and shovel plays, and always, always watch the margins.
Thanks for diving in with us. We'll catch you on the next one.
Stay curious.